Welcome back into Yahoo Finance Live as we're watching markets whipsaw as we get the latest in a flurry of earnings reports. It's still just a couple hours away from the latest Fed decision as Jerome Powell's going to be speaking at 2:30. I want to dig into one of the big reports we got, though, yesterday. That would be from Apple. Blowout quarter, largest spring quarter profit we've seen in Apple's history, notching a pretty impressive revenue numbers here, a 36% rise from a year earlier to hit 81.4 billion. That topped expectations. Shares down today, though, perhaps factoring in a warning from Tim Cook and Company that its current rate of growth likely can't and will not continue forever. And for more on that, I want to bring on Jim Suva here with us to kick things off in the noon Eastern Time trading hour, Citi Managing Director in Equity Research specializing in technology. And Jim, when we look at it, we can get into constraints, I suppose, that they warned about in a second. But just first off, your thoughts on the quarter, because it was pretty strong when you think about what the expectations were heading into it.
Well, Zach, it's great to see you again. And tremendously across the board, every metric was better. iPhones, services, margins, profitability, everything was better. So you may ask, why is the stock down today? Well, it basically was the perfect quarter, except they didn't give formal guidance. And the commentary on the earnings call was that the level of growth is going to slow or moderate a little bit. Investors don't like to hear that after the stock has been up so much the past 6 weeks or so. And simply put, the growth rate was perfect, but to sustain that, it's not going to happen. It's still going to be very high growth. We still like the stock. They're still going to be growing a lot. But some people will say, was this as perfect as it gets? And our answer is stay tuned, because there's still some more good things ahead.
Well, what are some of those things that you think could be a catalyst for the stock?
Well, Akiko, it's great to see you also. And I would say as we look ahead, the month of September will be important because that's when they launch their new phones. While there's a lot of supply chain issues and challenges, we do believe that Apple's getting its share, if not more share, of the equipment and the chips that are being needed. We do expect them to launch a new phone in September. Following that, we look at the holiday seasons where a lot of these wearables, ranging from the Apple Watch to the AirTags and the accessories, the different bands and the different ways to hold AirTags, those things are really catching on with consumers. So we expect the growth to continue. But right now, the news was so perfect last night on earnings. The reasons the stock down is a little bit of concern for the outlook, which there wasn't an outlook, but the commentary of deceleration. But we still see a good lineup of iPhones in September.
Yeah, and I wonder too, you talk so much about those chip constraints, and we heard it on the earnings call, even about this last quarter they reported, the expectations was $3 to $4 billion of an impact in terms of the chip shortage. They came in below that and still pointing to high double-digit growth in the quarter that they're going to be reporting next. When you look at all of it, maybe I suppose investors could be looking into maybe a bit of sandbagging or trying to present that the issue is still there, but Apple doing better than what they had predicted, even in their own numbers.
You're right, Zach. They are doing better. And simply put, if Apple is your customer and they are buying from you in large size, which Apple is the world's largest market cap company, is buying in size, if they're your customer, you're allocating your scarce resources to them. And if you have a very small company who comes in with a rush order and you don't know if that company is going to be around in another couple quarters or couple years, you're simply saying, I'm sorry, you're behind the line in Apple. So Apple's doing that. Plus, remember, Zach, Apple is now doing many of its own chips itself. They're building their own M1 chip, even though they're outsourcing it, but they're designing it. And because of that, they have less constraints. But for those who do supply to Apple, they are very much giving Apple more than its fair share of chips, and it's helping them.
If there's one more here, I guess, just to leave you with, putting it in the context, we talked a lot in the prior hour about all the other tech earnings we've gotten here, but Apple, notably year to date, getting outpaced by basically every other tech company out there. I guess there could just be some shifting away to rebalancing away from Apple to some of these other tech companies. How do you see it fitting in, continuing here with the rest of the year as they try and catch up?
Well, we do note that, again, if we were to flip it back last year, it was the exact opposite, where Apple was the outleader last year. Now, this year, there has been a shift over onto value stocks in tech away from growth, and also what's going to do well coming out of COVID when people start to travel again, go on vacations again. And some people view Apple as a big COVID beneficiary. That's true. We believe the platform will continue to strive and do well after COVID. But right now, there are some concerns about, hey, the new iPhone, could it be better? Not sure. Hey, what if China and the US tensions get worse? Because China does represent approximately 20% of Apple's sales. There's some risks there, as well as, the second half lineup of with these semiconductor shortages, can Apple actually make it to time on product? So we are seeing a shift that has happened to value stocks, and those have done better. But within tech, if you look at Apple over a multi-year period, I think I'd put it up against anybody and feel quite proud about that ownership of the stock.
That's good context for everybody out there watching. One of the best in the biz, Jim Suva, Citi Managing Director in Equity Research. Appreciate you taking the time here to chat with us today. Be well.